All right, what is up, traders? What's up, tycoons? Super excited for today's video. Really good one. We're going to make a very compelling case for GDX. All right, this is the gold miners. We're going to break down this ratio chart right here. Really important chart to me. We have not been able to break through this level, and here we are back at these levels again. This has been, a good buying opportunity on this chart many times in the past. All right, we'll take a look at, what appears to be many signals suggesting that we could go higher on GDX. All right, we'll also break down the daily time frame candlestick chart, go over some of the warning signals that you want to be aware of. Okay, now there's lots of upside potential, but you want to be aware of the risks as well. So we'll cover those, and then we'll also go over just a couple different indicators that I use, to identify trend. And we'll break down what's happening here currently based on this indicator. And we'll also take a look at more of a momentum-based indicator layout here as well. So you guys can, get a good overall sense, okay, of what could potentially be in store for GDX now that 2024 has started. So be sure to smash the like button, subscribe to the channel if you guys are new. As always, though, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I actually started a completely free newsletter for you guys. It's called Investment Intelligence. It's really good, free, valuable content. Okay. And I also try to sprinkle in 1 to 2 free trade ideas every single week in there. This is what they'll look like, highlighting the chart conditions, and then show you guys what it is that I'm looking at on the chart itself. Okay, you can go back and read some of the previous newsletters, and you can see that many of the trade ideas have worked out very well. Rivian went up 40% afterwards, PayPal went up over 10%, and Teladoc went up over 14% afterwards. So some really good trade ideas in there. The most recent one was RCX, right? We talked about that just over the holiday break after Christmas, December 28th. And the stock went up very well. You can see people hitting me up talking about how their January call options went up over 88%. Actually just closed the rest of those yesterday for over 100%, right? So sign up for the newsletter. It's completely free, all right? And you can get those emails straight to your inbox. I'm not going to spam you every single day with 5 to 10 different trade ideas. It's about quality over quantity. So, when you see the newsletters come through once or twice a week, be sure to pay attention to those. Now, you can actually join the Investment Intelligence Discord as well. It's only $10 normally, but right now I'm still running the New Year's sale. So promo code NEWYEAR, New Year, all one word, all caps, will get you into the Discord for just $1. Okay, so you can come in, join the Discord for $1. We talked about PayPal, Teladoc, Chewy was a really great play, Palantir. Really, all of these were really great plays. Since the screenshot, pretty much every one of these plays almost hit 100%. With the exception of really almost none of them. Palantir we closed for like 70-80%. But yeah, so if you want more than just 1 or 2 trade ideas a week, join the Discord. You guys can get in for just $1 right now. The promo code, I believe, ends on Friday. Now let's get into it. And what we're looking at here is going to be a ratio chart. Okay, so this is GDX divided by SPY. So this is essentially comparing, the price of the gold miners to the overall stock market, right? And you can see this massive period of underperformance here. But, we have this yellow line here highlighted. And you can see that each time, this ratio chart has put in a bottom when we come down to around these levels. And whenever we're down around these levels, we may dip below as we did here. We may dip below as we did here. But oftentimes this is when you start to see gold or GDX, rather GDX, so gold miners start to outperform the S&P 500. Okay, if you also take a look, we have some bullish divergence on our MACD here as well as our RSI. So not to make things too complicated, but basically if you take a look, we have a low here and we have lower lows, right? So clearly the price of this ratio chart has been going in a downtrend, but your MACD is making a low and a higher low, okay? And then the RSI is making a low as well as a higher low. So these oftentimes are used by traders as signals of potential bullishness in the future whenever you see these divergences. And we're getting positive divergences at the moment. Right. There's also this very long-term trend line. This goes back all the way to 2011. All right. And then we reject here again in 2020. And then we reject here again, here more recently last year. All right. And, the more times you test a level, the weaker it's going to get. And it's very possible, I think that we can break out for GDX. Okay. Now, if you missed one of my most recent videos, right? Gold typically does not perform well in a period of a soft landing. Okay, so when it comes to determining your portfolio and how you want to adjust your portfolio, if you're someone who's in the camp that we're going to have a soft landing and that nothing is really going to go bad with the economy and that everything is going to be smooth sailing, well, historically, that hasn't worked out very well for the price of gold. Gold is typically considered a little bit more of a risk-off asset, right? And people seeking a flight to safety sometimes. All right. So, this is something that you want to consider. And given, the massive bull run that we've seen in the stock market, over the past few years, it's no surprise that this GDX ratio chart here is in a downtrend. But we're at some very key levels that I highlighted, and this is definitely something that has my attention, right? We talked about the positive divergence. Look how long it's been building. Oftentimes, the longer these things build, the longer the move and the more aggressive the move is going to be. Here we had a positive divergence on the RSI and the MACD when we were making a low and a lower low here. And then you see we had a very strong bounce afterwards. So that's, chart number one. Now, chart number two here has a lot of things going on, and we'll go ahead and highlight those real quick. But essentially, we've got a trend line here, right? Rejected here, here. And, we mentioned the more times you test these levels, the weaker they can get. And so if we are able to break out of here, we would look for a significant move to the upside, right? Then obviously we have the cup and handle that's forming right here. So, here's basically your base, here's your cup, right? And then this is your handle right over here. Um, yeah, so we have the cup and handle, okay, and then we also have this little inverse head and shoulders that formed here. So, we're seeing lots of bottoming signals, a lot of bottoming patterns, right, with the cup and handle and the inverse head and shoulders. And we're really just squeezing now within this large triangle defined by these two trend lines. And ultimately, it's a matter of what do you think it's going to do, right? Do you think it's going to break to the downside, or do you think it's going to break to the upside? I'm looking for a potential break to the upside, being that we also have a cup and handle pattern, right? If this was something like an inverse cup and handle, then maybe I would be a little more bearish and suggest that, hey, we could break to the downside, right? So, we have this chart here starting us off, chart number one, suggesting that, hey, this is a good area where we could start to see gold outperform stocks, along with the positive divergences. Then we have this here with the cup and handle, inverse head and shoulders, triangle squeezing. We're seeing price action squeezing. Okay. This right here is going to be the candlestick daily chart, right? And so, here's where things get a little bit more shaky, right? And a little bit more cautious, all right? Specifically being because we do have a potential double top here, right? With top here, top here. Okay. Not every single double top is going to be exactly parallel to each other. And the main thing with the double top is all about breaking the neckline, right? So where's the neckline for this? Well, the neckline is right here at 28.87. So, a double top, right, is not confirmed until you break the neckline. For now, we just have overhead supply within this area here, right? So we basically just have overhead supply right here for now. But if this were to break through our neckline, okay, that's when this would become a double top. So pay close attention to 28.87. If this area flips and breaks down to resistance from support, then there's a strong chance that we come to the downside. Now, on top of that, all right, we have some blue boxes here shaded. These are what's known as gaps, right? These gaps, they do tend to fill about 90% of the time historically. But the big question is, when do they fill, right? Sometimes these gaps fill very quickly. Sometimes they take long periods of time to fill, right? I'll just show you guys a few examples. Okay, there's a gap in between these two candlesticks. You can see it filled the very next day. Well, there's a gap in between these two candlesticks and it filled within about a month. All right, so there's many times where these gaps come and fill. Look, there was a gap down here to fill, and then we ended up coming and filling it. So the big question is not so much if a gap is going to fill, but when a gap will fill. And so there is a gap up here above $36. There's even another one even higher Okay. And if we go back and just reference some of these other charts like this right here, the breakout suggests we could come up to 36 for GDX. So, we have a chart suggesting a breakout. We have a chart suggesting a potential bottom. Okay. And then we've got a chart here showing that price action could be drawn towards the gap up to fill around 36. Okay. But keep in mind the risks of the double top. Okay. So there's a couple ways, right? You could look to start potentially going long, right? And then, basically have 28.87 or slightly below 28.87 as a stop loss, just in case this double top plays out, right? Or, you can wait to see if we come down closer to the neckline, see if we actually put in a double bottom, right? And put in a bottom here, put in a bottom here. There's lots of ways to go about these things, okay? You can also use options to hedge yourself, and, buy protection. There's different ways to play it with options. You can sell cash secured puts, different things like that. We're not going to dive too much into that. We're really just going to go over some of the causes of concern on this chart. So we talked about positive divergences. We'll take a look how obviously we have a high and then we have a higher high. Well, here we have a high and then a lower high, right? So we have the potential double top with a bearish divergence, a negative divergence in this case. And we actually just got a bearish MACD crossover here as well. So what does GDX need to do to show us some signs of strength? Well, we would want to see us break out from this bearish divergence trend line. Okay, breaking these negative divergence lines often acts as, a breakout of a chart line, right? Here, you can see we very cleanly broke out, retested this line here, and then pushed up and made a higher high. If we can break through the bearish divergence trend line, that's going to be a good sign. We also would want to see the MACD cross back above the red line here, okay? And that would be, a sign of, a bullish MACD crossover as well. All right, so those are some of the things that you want to look out for potential signs of strength. All right, but in the meantime, these are signals of weakness and things that we do need to be, aware of, right? Now, the bearish divergence could have already played out, and you could say that that's what caused this initial drop here. Um, that's perfectly fine to say, but ultimately we do need to break out of that. All right, so double top potentially. All right, gap down to fill right around 27.40. All right, you want to be cautious of those two things. And it's very possible that that could happen if we break through and flip 28.87 to resistance from support. Okay, so that's a little bit shorter term. All right, it's not really going to destroy the charts and destroy this one or destroy the ratio chart, if we were to come down, and fill this gap or break through, the double top neckline. That's not the end of the world, but in a little bit of a shorter term, that's some of the things you want to pay attention to. Now, this is a, basically a little, indicator cross that I like to use. Okay, and you can see here when the white line crosses below this blue line, you see we start a downtrend here. When the white line crosses above the blue line, we start an uptrend. Here crosses bearish again, we start a downtrend, crosses bullish, we start an uptrend. And I'm not going to draw every single one. And if you take a look right now, the white line is trying to cross through the blue line here. So, that's something that you want to be cautious of, you want to pay attention to, because it could turn into a downtrend such as this, or, such as this, right? And we don't want that to happen, right? But that's something that you want to prepare yourself for. If this completes the crosshair, it's very possible we could see GDX go into a downtrend, right? So you want to be aware of that. Now, again, these pullbacks, is it the end of the world, right? If we go to a weekly time frame here, and what we're looking at essentially is going to be a potential inverse head and shoulder setup, okay? So, this gray box here would essentially be the neckline, your area of resistance, overhead supply for you to break through. And, if we were to pull back towards the bottom of the momentum clouds here, right around here, just above 28 is, right around 28.84 is going to give you that right shoulder territory. Okay. So if we were to just clear some of these drawings to make it a little bit clearer, if we draw, a horizontal line here, you can see the bottom of that green cloud territory would be the right shoulder territory. And, we would look then for a bounce and a move up higher through our neckline to complete the inverse head and shoulders. And where does this take you to? Again, if this inverse head and shoulders plays out, well, it takes you back up to that $36 area. So, you know, not trying to put things on a timeline, but I do think it's possible that we could see GDX go up to 36. Now, that's not life-changing, okay, or anything crazy, but it's something that I think could happen. Now, we talked about some of the bearish scenarios on the previous daily time frame. We need to highlight the weekly time frame signals. Well, right here, we have our momentum crossover indicator. And if this blue line right here crosses below the red line, okay, and it's also below zero, that's typically bearish, right? And it means that momentum is shifting bearish, right? You can see here when we got the initial cross below the red line, that was a signal that, hey, momentum's shifting bearish, and then it got below the purple line, which is zero, and that's really when the sell-off got much stronger, right? And you can see that we had a very significant sell-off after that. So that's something you want to pay attention to. You also have the MACD right here, just hovering above zero and also very close to forming a bearish crossover, right? We got the bearish crossover here very shortly after we got the momentum crossover, all right? And the MACD crossover basically happened right when the momentum line went below zero. And again, that's when we saw a pretty significant sell-off. Okay. The other thing you want to pay attention to is your DMI. The red line here is sellers. So the way to think of your DMI is who's in control of the price right now, right? And that's basically what this indicator shows us. So the green line, right, is going to show you when buyers are in control. So you can see at this point over here, buyers took control, right? And we're seeing, strong moves to the upside, right? The red line is going to be sellers, right? So if the green is on top, this means that buyers are in control. If the red is on top, it means that sellers are in control. And the blue is the average here. So if we take a look at what we have most recently, right, and we start taking, combining all of these things together, we're very close to getting a bearish momentum crossover. We're very close to getting a bearish MACD crossover. And the sellers actually just took control and crossed over. The weekly candlestick hasn't finished yet. So this could change after the time of this recording. But we're very close to getting a bearish crossover on the DMI. Okay, now it's not at really elevated levels, but we are seeing that the sellers are trying to push above the buyers here. Okay, and that's not going to be a good look. Okay, so if we see all of these things happening together and we end up getting a lot of these bearish signals, then maybe it's time to look for bottoming signals. Okay, and look and try to find and just basically be more patient, right? So while we do have a nice outlook and we went over some really nice looking charts in the very beginning, once you dive and take a look at some other things, it's very possible that things could potentially go bearish, right? And we talked about how if in times of a soft landing, okay, gold typically has not performed well. All right, and so if you think and try to put things into perspective, well, the market's been rallying, ridiculously, right? I mean, except for the first week of the year, we're seeing a lot of stocks pull back. But otherwise, what have they completely been pricing in right now? Well, they've been completely pricing in a soft landing. So, it's not always about what actually occurs, but what the market narrative is. And so, if the market really thinks that there's going to be a soft landing, oftentimes, in times that there are soft landings, gold is flat. Okay, so it's not like it's extremely bearish. It's just that it's not extremely bullish, right? It's gold is basically flat. So if that continues to be the narrative and what the market prices in, then it's very possible that gold and GDX may not see, the type of outcomes that we're looking for. But if we don't get that soft landing, okay, and investors do switch to a little bit more of a risk-off asset class, and money starts piling more into gold, then it's very possible we could see a lot of these bullish scenarios play out that we went over. Now, hopefully you guys enjoyed today's video. I know it's pretty long, kind of in depth, but I just wanted to give you guys a really detailed analysis, and I do detailed analysis like this all the time. So feel free to subscribe to the channel and smash the like button if you enjoyed it. Don't forget, you can get more of my analysis from the newsletter, okay? And this is where I send out free trade ideas, free valuable content to you guys every single week. All right. And you can also join the Discord. All right. Literally for right now, it's just $1 to get in. That promo code is going to be ending Friday night. But you guys can come in, get in the Discord basically for free. And, after your first month, it's $10 a month, which is less than a cup of coffee a week. And you can decide if you want to stay or not. But that's where you get access to all my custom scripts, indicators, different resources I have available, as well as all of my analysis and trade ideas. So appreciate y'all watching, and I'll see you in the next one.